Hey there everybody, Ijaz here, back for another video, and today we're going to be talking about Robinhood again because their prices skyrocketed 50% and we're going to take a deep dive into why. Now, you may remember a couple of days ago, which was 2 days after Robinhood's much anticipated IPO, I shared a video where we explained why the stock price had fallen to a low of 33. Now, since that video, on Tuesday, they ran 24%, and yesterday, Wednesday, they rose another 50% with a session high of $85, which we'll come on to what that means shortly. And they closed the day on a remarkable $70. So if you were to buy Robinhood at the 33 price, you would have doubled your money in just a few days. So let's take a look at the chart. And as you can see here, so this is the hourly chart because Robinhood's not been trading that long. They've traded, so there's about 53 bars there. So Robinhood had been trading for 53 hours. Now, if you remember, their anticipated listing price was going to be anywhere between $38 and $42, putting them at about 38 billion market cap. That's the valuation they were going for. They came in at the lower end of that range. So they came in at the $38, but we saw that subsequently, after a couple of hours, they reached a low point, if we just take that low there, of $33.29. Now, from there, they've had a remarkable rise up to the pump yesterday. At the highest point of that pump would have given you 150% returns. Phenomenal when they were at the $85 mark. Now, they've settled down at 70, like we said, and let's take a look into the reasons why. What are the catalysts behind this? And let's understand why some analysts are calling this the meme of meme stocks. Right, let's have a look. Let's head on over to another pretty mind map. Now, we mentioned that 24% run on Tuesday. We mentioned another 50% run yesterday, Wednesday, and they closed at $70. Now, there's a few different factors which are playing into this. Okay. Now, just to understand what this means, the $70 mark gives Robinhood a market cap of 58.8 billion, which we can see there, 58.8 billion. To put that into context, that makes it larger than Twitter and Chipotle after only 53 hours of trading. Okay, now we'll come on to whether this is a fair valuation for Robinhood shortly, but just to give you an idea, that's the craziness that's happening at the moment. Now, I want to head over into some sentiment analysis to talk about how much Robinhood was talked about. So if you give me a second, I'll pull that up. Right, so now you should be able to see my screen with swaggy stocks. Right, swaggy stocks, sorry. So as you can see, over the last month, this is Robinhood sentiment analysis. Right, so as we can see, from July 28th, we absolutely spiked here between August the 3rd and August the 4th, exactly like the share price, which means a lot of people are talking about it. Now, the interesting thing here is look at the color coding. So you can see the key here between positive and negative sentiment. Okay, so you can see that the majority of people are still speaking very positively about Robinhood, despite the whole GameStop fiasco. People are speaking in a positive manner more so than they're doing in a negative manner. And you can see how the stock price is correlated with this sentiment here. Now, if I come on to, right, where was that other chart we were looking at? There we go. So general trending tickers. We know that AMD's trending due to what's going on. But look at Robinhood there, 58%. So definitely a massive trend at the moment amongst the community, amongst retail investors talking about it. It's difficult to ascertain whether it is institutional investors or whether it is indeed the retail investors that are jumping into this. We know Robinhood was smart with they offered 25% of their shares to existing Robinhood customers, which is a great way to really incentivize the retail traders who they know are following this whole diamond hands focus. But let's head back over to the other reasons. That was the sentiment analysis, which was the first piece. Now, the other interesting thing we noticed was that yesterday, Wednesday, was the first day investors could trade options. Now, we know this is a natural catalyst for share prices to move anytime options are turned back on. And definitely for these type of momentum stocks, we saw that with GameStop, we saw that with AMC, a lot of the movement are from options. Now, yesterday saw 293,000 options traded hands, which is phenomenal. And that was just by 3:15 p.m. And it was an even spread between the bearish puts and the bullish calls. Okay, so that was what happened there. The other catalyst we saw, very interestingly, was from Cathie Wood. So Cathie Wood announced that she bought an extra 89,000 Robinhood shares. Okay, now that brings her total in the ARK-P fund, okay, with the very popular ARK-P fund, to 5 million total shares, which is 0.9% of our portfolio. So it's definitely a significant position, and it could be one of the catalysts why, after that announcement, a lot of the retail traders and maybe even some institutions started jumping in, given Cathie's track record to date. Okay, now this brings us to an interesting point of valuation. Where do we sit with this? I mentioned in my last video that I'm going to stand back and watch this one. I got burnt with the Coinbase IPO. Now this one's clearly gone the other way, and I've missed out on a double there. But we don't know where this is going, right? Like I said, that market cap is phenomenal, 58.8 billion, and at the $85 mark, it was even more than that, which puts them bigger than a lot of significant companies. Let's have a look at some of these valuations and get an understanding behind this. Switch over. Yep. Right. Let's have a look at this one. So what I've done here is I've just made a quick spreadsheet and I've pulled together a few different publicly traded comparative stocks which we can compare Robinhood to, right? Now none of them are identical to Robinhood. I understand that they're a blend of stocks, and they're heavy in options, where let's say Coinbase is more crypto, and SoFi slightly different. But I tried to get the data that was available very quickly to give us a rough idea of where this stands. And guys, I do recommend you go and do this exercise in a more detailed manner. I did this very quick and dirty, but just to give you an idea of kind of how you want to start looking at valuation. So, as I mentioned, at the latest trading price, Robinhood sits at a market cap of $58 billion. Now, Coinbase are at $64 billion, if you round up, and SoFi $13 billion. To put that into perspective with some of the more traditional players, Charles Schwab are sitting at 127 billion, and international brokers at 26 billion. Now, what I've done is I've put in their trailing 12 months revenue, and I've calculated their revenue multiple. Okay, so you've got Robinhood trading at 43 times their trailing 12-month revenue, and Coin at 22 the same. Okay, you can see here Coin are more than double the revenue that Robinhood are bringing in. Then, and now coming onto the and you understand this, right? Because these are fast-growing companies, they're going to command a higher multiple. Now, if you look at the incumbents, and we're not saying we expect 8 to 10 as a revenue multiple for the likes of Robinhood and Coin, but just to give you an idea, they're trading at 8 to 10 times their trailing 12-month revenue. Now, we've got the earnings here. How accurate these earning figures are yet to be decided, and we can update this when we get their new quarterly earnings. But to what I had available here was Hood are still making a loss, and therefore they're trading at an infinite multiple, and Coin with their 1 million of profit are trading at a 60 times earning multiple. Okay, so you can see the disparity here. They're trading at an infinite multiple, they're a loss-making company, and yet their market cap is still very similar to Coin. Look at the accounts as well. 18 million registered accounts on Hood, Coinbase 56 million, SoFi 7.5 million, but we don't have their financial data just yet until they announce their earnings. Okay. Similarly, look at Schwab, a 28 multiple on their earnings. They're actually a profitable company, right? Now, obviously, investors here are going for the growth. They want to go for that growth, and that's why you're paying the higher multiples. But just to give you an idea of where we sit, that's what it's looking like. Okay, so Robinhood have half the revenue that Coinbase have, but therefore they're trading at a double multiple. Okay, so very interesting point. Keep an eye on these metrics. I mean, I'm certainly not jumping into Robinhood at the 70 mark. I'll be keeping a close eye on it, and if this starts to normalize, I mean, look, a fair price for Robinhood is around 30 to 35 mark. The challenge is there's a lot of interest behind this now. Whether it comes back to that point, I'm not sure. I'm not desperate for it. If it does, I'll probably nibble at it around those price points. A lot of people are saying, look, Robinhood at one point was available for $60 on the private market before it went to IPO, and therefore that justifies it should be at 60 now. the numbers are steep. And if we look at, let's do that now actually. Let's have a look at let's see how they're trending on Google. So we should be able to see a trend spike around the time that the last 2 days.
How can I help?
Thanks, Google. So if I type in Robinhood and share my screen. So now what we can see is we can search Robinhood. This is in the United Kingdom. Let's switch that to the States. And yep, we can see, look at that. That's the initial spike in the GameStop saga. And then we can see here a doubling in the period to August. Let's see if we can get closer. See if we can get to the 7-day mark just to see how it's been trending over the last 7 days. There we go. So that's our spike there over the last kind of 24 hours as interest has peaked back up again. Okay, that was the initial IPO. That was that was the prime interest at that point when it went to IPO. We saw the price come down after the initial excitement, and we can see now people started searching Robinhood term again, given the last kind of 24 hours. Now you always need to be careful with these trends data. This is people searching Robinhood in Google, but it gives you a good idea of how many people are going, oh, what's happening with Robinhood, and therefore where's the momentum. Right, so that was a quick update on Robinhood. Hope you found that useful. I think to summarize, we've got a few things which are driving the Robinhood price up right now. You've got Cathie Wood buying with ARK-P, and a lot of people are FOMOing in, saying that if ARK is in and Cathie Wood is in, I'm in too. You've had the first day of options trading yesterday, which had a huge surge of 293,000 options traded. You had the sentiment analysis with a lot of people on Wall Street Bets and other social media platforms talking about Robinhood at this stage. So it'll be interesting to see what happens at close of play. We're about an hour or so away from close of play. It'll be interesting to see what happens and whether we're coming back down or if it's going to keep pumping. Either way, guys, don't chase something which is up 150% over the last 24 hours. Please don't do that. And I'll see you in the next one.